Hey everyone, Amazon reported fourth quarter and 2023 earnings results that sent the stock price up 7.7% on the day after those earnings were announced. So in this video, I'm going to review those earnings. I'm going to update my recommendation of Amazon stock. Coming into this earnings report, I had rated Amazon stock as one of my top stocks to buy in 2024. I've had it on the list since December 31st when I released that video. So you're going to want to tune in to see if I'm changing that recommendation. So let's get into these financial results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
All right, Amazon reported net sales which increased by 14% to $170 billion in the fourth quarter. Notably, AWS segment sales increased by 13% year over year to $24.2 billion. I was watching this segment closely in particular because in the most recent quarter, it seemed like AWS segment flattened and was poised for growth. And indeed, it did grow, although mildly from the previous quarter. The previous two quarters, AWS increased by 12% each, and in this quarter it ticked up to 13%. Nevertheless, that increase was great news for stock investors because AWS is Amazon's most profitable segment, and this is what drives the majority of Amazon's stock valuation. So the fact that AWS increased by 13% is great news because it at the very least stopped the downtrend. Previous to stopping at 12%, AWS segment had decelerated in growth rate for several quarters, and then it was 12 and 12, and now back up to 13. So nice to see that from Amazon in this quarter. Maybe more impressively, operating income increased to $13.2 billion in Q4 compared to $2.7 billion in the fourth quarter of 2022. That's an increase of roughly 5x of operating profitability, or an increase of more than $10.5 billion in difference in operating profitability. That's a surge in profitability, not an easy thing to do. Amazon achieved this by increasing effectiveness and efficiency, mostly in the logistics network. For the full year, in 2023, net sales increased by 12% to $574 billion. Operating income tripled to $36.9 billion in 2023 compared to $12.2 billion in 2022. So this impressive performance was not just specific to Amazon's fourth quarter, but Amazon had a remarkable year for 2023 overall, and that seems to have continued in the final quarter of the year. Impressively, its operating cash flow increased by 82% to $84.9 billion for the trailing 12 months compared to $46.8 billion for the trailing 12 months ended December 31st, 2022. That's remarkable. The company generated $84.9 billion in operating cash flow. And if you look at $84.9 billion divided by the $575 billion in sales, the company generated a respectable cash flow from operations to sales margin, considering that its logistics network is so capital intensive. The fact that it still generated strong operating cash flow from this type of business is truly impressive, because this type of business with the thin profit margins and the heavy capex requirements drives a competitive advantage, because it's not going to be easy for any rival to match Amazon's fulfillment network, right? Matching it is pretty much out of the question at this point. But even making progress, can any network even make progress against Amazon's now robust competitive advantage in shipping? That remains to be seen. Some retailers like Walmart and Target are making progress in a different strategy by using their stores as fulfillment centers, the buy online, pick up in store. That's a competitive match now, because customers, if they're going to buy something from Amazon and get their product, even if they can get it the next day, that's still not faster than being able to go to the store and pick up the item that you purchased within an hour or two. So that's really the only challenge to Amazon's fulfillment network right now. Let's see if Walmart and Target can continue to expand on that and maintain that, or will Amazon close that gap as they get faster and faster in delivery? So we've been talking about that, and CEO Andy Jassy saying the regionalization of their US fulfillment network led to their fastest ever delivery speeds for Prime members while also lowering their cost to serve. This is a strong area for Amazon to focus on, and I would be happy as a shareholder to see Amazon working in this area because it's benefiting both sides of the equation here. It benefits Amazon because it lowers the costs. It's closer to customers, so it doesn't cost Amazon as much to deliver these items to customers. And at the same time, customers get faster delivery speed, which is benefiting customers. So it's a win-win equation on both sides. And I'd like to see companies focus on these areas, on these opportunities, because it doesn't sacrifice the customer experience to increase profitability. It does both at the same time. These types of opportunities are rare, and I'm happy to see Amazon focusing in this category. Advertising has been a pleasant surprise for Amazon stock investors in the last 2 to 3 years. It's built a robust advertising business that's generating billions in revenue. And although Amazon hasn't broken out the profitability of the advertising segment, investors are reasonable to expect this part of the business to have profit margins comparable to its AWS segment, more so than comparable to the e-commerce segment, which has profit margins of less than double digits. And CEO saying advertising services continue to improve and drive positive results. Amazon now offers same-day delivery in more than 110 U.S. metro areas and operates more than 55 dedicated same-day sites across the U.S. This is important because customers shopping on Amazon's website are more likely to purchase from Amazon the faster the delivery speed that is promised. If Amazon can put up there that this purchase, if they buy it, they can have it within the next day or within the next few hours in the same day, customers are more likely to purchase. Customers want their items faster, all else being equal. So moving on to the first quarter 2024 guidance from management. Net sales are expected to be between 138 and 143.5 billion, or to grow between 8 and 13% compared with the first quarter of 2023. So year-over-year growth of about 10%, let's round to, for the first quarter of 2024. So management not expecting this accelerated 14% growth rate to continue in Q1. That's expected to slow down to 10%, which is still solid. Operating income expected to be between 8 billion and 12 billion compared with 4.8 billion in the first quarter of 2023. Again, this is really strong. That means at the midpoint of 10 billion, operating income will double from the previous year's rate of 4.8 billion, which is already significantly above the year before operating income. So operating profitability expansion expected to continue for Amazon, and this is great news for Amazon stock investors. So overall, to update my recommendation of Amazon stock, let me remind you, I had the stock rated as one of my top stocks to buy in 2024 since December 31st, and I'm now keeping that recommendation in place. So I'm updating that recommendation and reiterating the fact that I still like Amazon as one of my top stocks to buy in 2024. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.